First up, let's talk Nordstrom. Shares are up about more than 30% over the past 6 months. But UBS is seeing potential challenges ahead as consumers flock to discount retailers. They currently have a sell rating on that stock. But, Jeff, you believe Nordstrom is actually a buy. Why?
Yeah, I do want to push back on that note, Dom, and I think it does make a lot of sense to be a buyer here. Let's look back on a 5-year perspective. It's still recovering. The consumer, which is still strong, but it's still recovering on a 5-year perspective, down about 55%. So as I continue to see strength in the consumer, this is a consumer cyclical name I think we want to own. If you look at a forward PE ratio, it's relatively inexpensive over the last 5-year average. So trading with a 4% dividend, this stock right here, right now, Dom, as long as we continue to see strength in consumer, and no outlier of inflation, I think you want to own Nordstrom.
All right. It was also a featured stock yesterday, and I think Gina Sanchez was talking a little bit more about the bear case over there. So we have the bull and the bear. Next up is CrowdStrike. Shares are down nearly 7% today, but more than doubling over the course of the past year as demand for cybersecurity continues to grow. Wedbush is upping its 12-month price target to $350 a share from $278 prior, reiterating its buy rating this morning. What's your take for CrowdStrike?
I think you can be a buyer here, too, but you have to be very careful here. We are testing the 50-day moving average, down about $21 in today's action. But you're seeing a partnership roll out today. If you saw the news, we've been talking about Dell and CrowdStrike, talking about how they can be implemented, their platform, to help Dell computers and Dell software out there. Because it's interesting, all these cybersecurity threats we are seeing, they become more sophisticated. They become more stealth. So I think when you talk about cybersecurity, we actually own Palo Alto. That's our preferred way to own this. And if you look on a 3-year metric, Palo Alto Networks has been outperforming CrowdStrike. But on a 1-year, there's a ton of momentum here. So I think it's inexpensive. But look at this 50-day moving average right here at 293. That you can be a buyer against it.
All right. And finally, Jeff, let's talk JD.com. Lots of headwinds for the Chinese economy and the markets as of late. And Morgan Stanley warns that increasing competition in the discount segments of e-commerce will keep pressure on JD this year. Jeff, it's the micro with the competition. It's the macro with the slowdown in the Chinese markets. What's the call on JD?
I think you could potentially be a buyer. I want to be very considerate because this is a falling knife. And when you look at JD.com, when you compare it to Alibaba, Alibaba is about 5 times bigger than JD.com. And I actually have exposure to JD.com in the ETF PGJ, that's the Invesco Golden Dragon Index. But I get very careful, to your point, what's the catalyst to own China? We have seen the continued struggling economy over there. There's going to be a catalyst, but when you talk about being more than 50% off its 52-week high. I know you had that chart earlier, the good, the bad, the ugly. This is the ugly, but I like ugly charts. I think there's opportunities in ugly charts, Tom, but you have to have your trading hat on versus your long-term investing hat.
All right, so that's the call on all 3 of those names. Jeff, while we have just a few moments left here, let's talk about the pullback we're seeing in markets right now. The big take from you on whether or not there's still more downside ahead.
You rolled me out on the one day in the last 18 weeks. We actually have red on the screen. So it's interesting to see. I think we have been overextended. We talk about RSI, that's Relative Strength Index. So yes, you could argue that RSI levels, not just in NVIDIA, but in the overall S&P 500 are overbought. But overbought conditions can persist, and we're seeing that. And we're going to be waiting to hear what Fed Chairman Powell says. So I'm still cautiously optimistic. But Dom, you know how I feel about markets. They're not linear. They can't go straight up. So after the 4 consecutive months of positive gains, I think it is positive. I think the market would welcome to see us go back and test that 4950 level in the S&P 500. It's just a back and fill concept that we've seen for decades upon decades, and I think it may be coming. I think it's something to embrace and lean into and buy, not run from and get scared.